Well, it's the end of '08 now, and we've got to look back at '08 and say, what a year. A year of amazing and almost unprecedented change in Australia and right around the world. And that's caused an awful lot of fear, particularly in the markets. I asked one of the senior economists at one of the banks, I said, well, what difference has '08 made to the average Australian? And his answer was, the average Australian has lost wealth, and by losing wealth, they've lost their confidence. And he was particularly referring to the equities market because, as he points out, around 80% of Australians have an exposure to the equities market through their superannuation funds, and 40% of Australians have exposure to the equity markets directly. That's massive, and something that I actually didn't realise myself, albeit I've seen even my own private superannuation funds that have invested in managed funds, etc., decrease significantly. It's a different story for property, because property is regarded as an illiquid asset, and the majority of people who own property own their own houses to live in. In fact, nearly or over 5 million Australians own their own residential property, but less than 10% of Australians actually own an investment property. So we're talking about completely different dynamics, but that confidence level is down. There's no doubt about it. What's going to happen? Well, '08, we've seen interest rates, the start of significant interest rate cuts. And don't forget, when I go back to the start of '08, we saw interest rates trending up in March to 9.5%. That are now down to around 6.5%, 6 to 6.5% on your variable rate. We also saw petrol prices. I remember going to the petrol bowser and paying $1.40 or so for a litre, and now I'm paying less than $1. It's quite amazing, and that makes a huge difference to us. 2009, the focus is going to be on cash flow. There's still going to be some bad news from the economy because the economists are saying that unemployment's going to rise from around 4.5% to maybe as high as 5.5% to 6.5%. And that's going to have a significant effect on a lot of Australians. But we're still going to have 92, 93, 94% of Australians employed. And that's significant in itself. The Australian economy is still strong. The Reserve Bank, the banks themselves, the government, even business agrees that the Australian economy is still very strong. But we're going to have this lack of confidence. Now, the lack of confidence is actually creating an opportunity for us. It's creating an opportunity because interest rates are continuing to be forecast to go down. The Reserve Bank now has reduced interest rates by a full 3% in the last 4 months. Where's that going to go to? The money is on interest rates. Currently, the cash rate's at 4.25%. And the smart money's on that going to 2.5 to 3%. So coming off another 1 to 1.5%. And that's going to be significant for us. But then I asked one of the chief economists, okay, well, what is that going to do to the long-term rate? Because it's really the long-term rate that affects us if we're going to take advantage of this window of opportunity. The long-term rate is really interesting to look at, because for quite some time the long-term rate has been lower than the variable rate, and still today it is. You can get a 3-year fixed loan from one of the major banks at 4.99%, yet the variable rate from that same bank is around 6.4%. So quite a distinction. It's expected though that that will significantly reduce, that is that difference between the variable and fixed rate will reduce between around March and June next year. And that's what I'm looking for. I'm looking for when I can get the best fixed rate I possibly can and to lock that in for as long as I can, 5 years if possible. Because I figure that if I've got well over 100 properties and I can lock the loans in, or the interest rate on those loans in, at 5% for 5 years, firstly, I'll be cash flow positive straight away, but secondly, my cash flow will be improving by nearly 10% per annum because we still have rising rents. And that's not going to dissipate. Next year, we're still going to be short around 40,000 houses needed to fuel the population growth that we have. So 40,000 homes we're going to be short, and the year after pretty much the same. We're just not keeping up. And therein lies the other sting to the tail. The sting to the tail is that interest rates will only come down, continue to come down, until the government sees, or until the Reserve Bank sees an improving in the economy. And the first place they're going to look for improvement in the economy is going to be in residential housing, because that's the area that they're looking to underpin with the first home buyers grant and these reducing interest rates. And all the economists I speak to suggest that interest rates, yes, might come down and bottom around March, June, maybe August, but as soon as they see a spark in the residential house prices, that is, they see it start to go up again, interest rates will go up and go up quickly. So I see our opportunity as only be a limited opportunity during 2009, but for me, probably one of the most exciting times in my financial life. In the last 25 years, I've never been able to borrow sub 6% on term. And I'm looking now at borrowing, as I said, sub 6% for maybe 5 or even longer term period. And that's phenomenal. For a lot of you as custodians, that's a chance to really lock in your cash flow. And that's why I'm saying 2009 is that window for us to access cash flow. Really, really exciting. The other really exciting development for us at Custodian is Custodian Land and the prospectus that we've put together for our first ever syndicated land development. For a long, long time, I've had custodian clients say to me, John, how can we get involved, either ourselves or through our superannuation funds, in the actual land development and get the sexy rewards of land development? And I've thought about it, but never been able to come up with anything until now. Custodian Land is a syndicated land development where we're going to develop around 200 blocks in Melbourne, 20 kilometres from the Melbourne CBD. And the valuations done for the prospectus anticipate that we'll sell those blocks at around $145,000 and show a return of 25% or nearly 25% internal rate of return. Now that's a really good return, but from my perspective, I'm looking at that 145,000 and seeing local comparable sales in the area significantly higher than that, believing that we could actually do much better. But you need to get advice on that. You need to read the prospectus and you need to get advice from a financial planner. And if you've got any questions, you can ring our 1-800 number below, and that will direct you to any questions you've got in regards to Custodian Land or the prospectus, or you can go on custodianland.com.au and download a prospectus yourself. Finally, I asked my researcher to give me my best and worst performer from my own portfolio. My worst performer was one of my houses in Perth that lost about 5% in its value. And I think that was really, it went up way over the odds of what it should have gone up to $500,000, and now it's come down to about $475,000. Doesn't really worry me because I only paid about $245,000 for it. I still, though, got rental growth of around 10%. So as they even out, I'm comfortable with that. My best performer in the last 12 months, that is this calendar year, has been one of my houses in Brisbane, in Lota. It's actually gone up by around about 8%, but phenomenally had nearly 15% rental growth. So I'm really happy with that. Compared to some of my other equities and my superannuation, which has absolutely been hammered. So I say to myself, I'm glad I stick to one thing and do it as well as I can. Let me take this opportunity to wish you a fantastic festive season in 08. It's been a huge year for so many people, so much change, as I said, around the world. Take some time, spend some time with your family. It's always a great thing to do. Relax, kick back, and come into 2009 looking for that opportunity and be as excited as I am in seeing that opportunity, that window of opportunity that we may have for only a short period of time. I'm going to be doing a series of goal sessions in late January, early February, right around the States. So if you're interested, call your consultant or get online and book yourself in for those goal sessions. And I'm going to be actually talking in detail about what we can expect throughout 2009. Thank you for listening to me. Have a fantastic festive season.